All right, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Monday the 12th, and we had a nice bounce in the indices today. U.S. equity indices, SPY was up 1.5%, Qs were up 1.8%, IWM, which was all over the place this morning, did finish up close to 1%. That was actually down pre-market and looking a bit iffy early on. But you can see before we go into the small caps, which we'll look at, S&P, we did finish off the close. We really started to get going in the last hour of the day, but a little bit of a fade. I think there was a rumor that there was a big sell imbalance, which took things down a little bit. So, looking at the chart, I think you have to just take one day at a time right now and say, hey, it's a really nice move after Friday's, putting in the short-term bottom here at the 200-day moving average and twice stepping onto the 200-day moving average. I would say a little bit of continuation from the end of the day of Friday's rally. So we're still by no means out of the woods. I would say we need to reclaim a little bit of the short-term moving averages. This is what I was talking about pre-market. I said it would be really nice if some of the averages went ahead and reclaimed this 5-period moving average. Why is that important? Because it's just a really good sight line for the trend. We spent a lot of time, basically all of January, above this 5-period moving average, and then basically we started to come in and since I think it was January. Yeah, I guess it was right around February 1st. The price started to dip below the 5-day moving average, and we haven't been able to get back above it since. So today was the first time that we really gave it a valid effort. Besides last Wednesday, where we was basically a false break higher, and we got stuffed at the 50-day moving average. So we'll see. What changed a bit today? Well, there was some things that I was watching today. I had a checklist going into today, things that I was watching or waiting for, and let's see if I can zoom this in. Yeah, I mean, one of the things that I was looking for was Asia and European markets Sunday and Monday morning. Well, China, the Hang Seng actually finished right about flat and gave back a lot of the profits. The local Chinese shares did end up, and a couple different markets. I think South Korea, Taiwan were up a little bit, but it was mixed, I would say, for Asia. Europe was strong. The European markets hung on to the gains today. They finished just slightly off of the highs of the day, so that was fine. I think that met one of my checklists. The VIX to return to contango, where further out months are more expensive than the nearer term months. Not yet, but the VIX did come in pretty hard today. So I think the VIX. Let's see where we finished today on the VIX, which again, I think you have to keep an eye on at this point in time. Just one of those things. Until we drop, I'd say below 20, get to more of a normalized market. We did drop decently. We're down 11% to 25.61. So I think we got to go a little bit further. This did droop below that yellow line, so that's a good sign. I don't think the VXX did it. Because it's a little bit different futures contracts that they follow. Or the VXX does follow futures contracts, and those are heightened right now. So that might change when we get through the week or a little bit further into the week. But, again, progress. I think progress was made. Again, if you look at IWM, holding that 200-day moving average a few different times. So I think small caps are something to watch. Again, they've been pretty volatile. Like I said, they were down about 0.5% pre-market. And they managed to finish strong on the day. In terms of sectors, in terms of sector performance, well, before we get into that, I guess my last check mark, or my last two check marks that I had on the list today, which I might as well go over. The 10-year bond yield to stop at 3%. Well, bonds actually rallied a little bit today, which gave us a little bit of breathing room. I think, considering that was one of the catalysts that got us going. If this comes back just a little bit, I think that'll be a nice sign. So where did the 10-year yield finish today? It actually came into 8.58. So this actually says up 7, but I guess the 30-year, if you look at TLT was down about 40 basis points. So I guess a little bit of difference between what happened here, the 30-year and the 10-year. But 285. So we really don't want to see that go much higher. Really, I think I have 3%, but really, I don't want to see it go above 2.9. That could cause some issue. And then volume. So SPY volume, it was trading all last week. If we go back over here to SPY, let's see how long. Oh, there we go. You could see that it's still heightened volume. It was about 20% higher than normal, but you could see a couple days last week, we traded about double the 30-day volume. So that's a good sign. I mean, there was last week just right around $24 billion of outflows just in the SPY. So if you see that big volume again in the SPY, it could signal more unwinding that's taking place. So we did not see it today. It was about just 20% higher than the 30-day. So these things take a while to settle back in, but certainly you could see from where we were last week. I think it's the lowest volume day of any day in the last what is this, six days. So that's a good sign. You want to see that start to come in. I'll go over a couple names that we saw both in cash as well as option flow today. There was some interesting trades today, no doubt about it. Let's see if I have that over here. Yeah, you could see that I think there was some accumulation going on, especially in some emerging market ETFs. This is KBA. This is basically the Shanghai. This traded, again, it doesn't trade huge volume, but it traded 5 times normal volume and only trades normally about 150,000 shares. Traded 750,000 shares, and I checked a couple prints in this, and it looked like it was an accumulation going on. There was 1 or 2 blocks that went at midday, and you could see the volume today too. So looks like somebody was buying the dip. So again, I already went over those all those prints. I'm not going to go over them today. A couple other names in that space that saw a lot of volume. Look at EEMV, which is emerging markets minimum volatility. That traded just about 5 times normal volume as well today. So FEM, we caught this earlier. I put this out on Twitter. This is emerging markets. It's just another ETF for emerging markets, Alpha Dex. But once you get into like the second tier ETFs, you can analyze them a little bit better. Normally trades 250,000 shares, traded 1.1. I did look at a big print earlier. I think it was around 800,000 shares that were bought. So that's pretty good. T-bills would like to see that this ETF, which traded 3.3 times normal volume, would like to see that this is an outflow. I'll have to check that. Very difficult to find that out. You can also see ASHR, which is another Shanghai ETF, traded a lot of volume today. There was one more that I wanted to show you, EUFN, which is European financials. Look at the volume in this. Normally trades 2.5 million shares, traded 6.1 million shares, and there was a nice big print. I will show you this one just so that you can see how this looks and basically how you read the tape, which is what I do all day long. And I look to see if people are really taking some shots at some names. But if I just look for any prints above 50,000 shares, you could see this 2 million share block that went up this morning before the European close. And I did check the print. I'm pretty sure that's a buy, 23.82. That's about a $50 million transaction. So again, does look like some people were buying the dip out there today, and a lot of areas that have gotten beaten up. Emerging markets, European financials, some of the darlings of 2017, and it looks like some buyers went back into those names. Just to kind of dig further into sectors, the metals and mining, some of the areas that really got beat up last week, the metals and mining was up 3%, XOP was up about 2.6%, OIH, which was down over 10% last week, came back and reclaimed 2% of it. But there was other areas besides energy and metals that were up today. The airlines ETF was up 2.2%. Biotech was up 2% today. So there was definitely some things, and the option activity that we went over on Friday and in the weekend video turned out pretty nice. I mean, I did not do a ton of buying on Friday, but what I did add did pretty well. Micron was up 4.4%. That was a position I've been long some January options, so that was a nice add for me, and we'll see if that can. It kind of stalled out right at the getting into the valuary for February. So again, it's got more work to do, and we'll see what it does here. It could not. reclaimed the 5 period moving average, but did not reclaim the 20 or the 50. So again, one day at a time. We'll have to see if it turns away. Maybe a bad sign, but for now, I would say progress. And a couple other names that we saw some activity. Lamb Research. This was all. Keep in mind there was a ton of call buying. I would say on Friday the biggest group that was bought was the semiconductors. We saw buying in SMH. We saw buying in Micron. We saw buying in Maxim. So today we saw some weekly calls that went up in Lam Research. Keep in mind Applied Materials reports this week, so it could have something to do with it. But certainly these names have been pretty oversold, and you can see Lam Research was up well over 4% today. So pretty nice price action there. And then we started to see little things like Apple repeat call buying today. So Apple back above the 200-day moving average. So sometimes it doesn't have to be that exotic with some of the names that we're seeing the call buying in. Apple, I mentioned I went through a pretty comprehensive note that I sent out to Tribeca Trade Group members this weekend, talking about how Amazon right on the 50-day moving average bounce and some nice progress made. Again, I'll say that I guess it's the P word for today, progress. But Amazon, didn't reclaim everything, didn't get above 1396, but we definitely saw some calls go up in this one. So people are definitely taking their shots today. Apple, also Bank of America, that was a repeat call buyer, and a couple names, which that was one of the names that I detailed in this weekend setups as well. So Bank of America is inside value. It looks pretty good. I mean, you've got a dip, and you've got it reclaiming some levels today. So pretty good, all in all. Google, which is another name that we saw calls being bought and puts being sold. Nice bounce off the 200-day moving average, and getting Google at the 200-day moving average or very close to it is something that I think is worthy of taking a shot, taking a trade. A couple other names that we saw today. Match.com, MTCH. Look at this chart. So I did not take this trade today. And of course it's up 6.4%. It closed close to the highs. This is one I'm going to have on my radar. I mean, the trend is really nice in this name. It's gone from 20 bucks to 37. I just could not buy it basically close to the highs of the day when we saw the calls go up. Both some March calls going up and then some further out calls. Just a couple other trades because there were some interesting ones. GDX, which is a tough trade. This chart to me just looks like sideways chop. It seems to, whenever it gets down to this lower 21 range, buyers come back into it a bit. And certainly if you take a look at what we saw today in this GDX, you could see there was a total of 42,000 of the January 2020 34 calls going up. So, kind of interesting. I would think that that's somebody maybe betting on inflation going up over the long term. It's a pretty decent trade looking for more inflation. And then what was really interesting is this trade that went up at the end of the day. Like I said, there was a lot of interesting trades that went up for a couple days. Valentine's Day trade, 500,000 spies, 270, 272 and a half call spread. So just a 50-cent wide call spread. What did they pay for this? 5 cents. So now keep in mind, 500,000 contracts. That's the premium to spend on something like that is $2.5 million. So what happens on Wednesday morning? Well, we get the CPI gauge of inflation on Wednesday morning. So pretty interesting positioning going into that. So they're gonna require a decent move. Right now, SPY's closed at I think 265.34. So they're looking for a move of about $7.50 by Wednesday. So who knows? Maybe somebody thinking that this CPI report might come in muted. If we get a lower than expected inflation report for Wednesday, you would think that equities might take off, right? I mean, that gives the Fed less ammo or less need to go ahead and raise interest rates the 4 times that might happen this year. So very interesting trade. So maybe just something to kind of watch. Again, $2.5 million of option premium spent on that trade. Someone asked me, and a member asked me, was this a debit spread or a credit spread? I mean, I would assume, when usually somebody takes a shot for 5 cents, they're not selling the premium for 5 cents. I think somebody is looking to try to make a big, try to really make their week on a big move in SPYs. But that's just my interpretation of the trade. All right, so that's it. There's a number of other trades, but we go through these in detail in the trading room every day. Thank you for watching. You can go to TribecaTradeGroup.com to be a member. Right now, if you sign up, you can get 2 weeks free, and that's a special that I'll be running just for a little while, because I really want people to see what we got going on in the room. I think it's second to none in terms of the analysis that we do, the macro analysis, as well as the micro with call and put option flow. Thanks very much for watching, and have a great night.